Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-mini futures for the session of 31st of August. In this video, I am going to show you the market recap during the last session and a potential trade review in the 3 minutes time frame, which I will cover the entry, exits, and the rationale behind. And the trade was based on the popular breakout strategy I adopted, combined with the analyzing the momentum of the counter trend. So going forward, I will also cover the bias, the key levels to pay attention to, and also my personal trading plan for the session later. Alright, so let's just get started. So as we can see in this daily chart for the S&P 500, so last Friday was still another bullish day. So as we can see here, last Friday volume was relatively decent, a bit lower than the previous day, but still is in a relatively healthy volume together with uptrend, bullish day. So you can see that in this daily chart, I have constructed the up channel that's from the June all the way until now. So pretty much the price has been trading within this up channel for around 2 to 3 months. So has been touching nicely within this up channel, and also the middle line has played a key role as well. And you can see that since we are entering into an uncharted territory, I think we can pretty much rely on the past action that's S&P 500 reacting within this up channel. So if we think this up channel is still in play, so the probably next immediate resistance will be somewhere around 35.50, so touching the overbought uptrend channel. Anyway, I will just give it an overview for now, and I will just give a little bit more elaboration in the later part of the video. But before we do that, let me just switch to the hourly time frame, and let's just take a look what's happening in the detail in the hourly time frame for last Friday action. So we can see that last Friday pretty much we have this kind of the lowering down of the volume, and prior to the US opening session at around 9:30 p.m. my time, so this is a 9:30 p.m. bar, and we have a relatively mild reaction. So this is the Asian session, and throughout the noon and then through to the European London session, we have just a minor reaction that actually formed the non-RTH low. So not too much threatening. And during the US opening session, so we see that first bar is a reaction, and actually first bar and second bar were reaction, and subsequently tested the non-RTH low, and eventually we have the relatively good run and closed near the high. So definitely this is a nice uptrend and closed near the high. So definitely a bullish action for last Friday. So let me just share with you my potential trade, because last Friday I wasn't looking at a computer during the US session, so definitely I did not trade at all, but I did find a pretty good trade from my review session. So as you can see here, I have already marked up the potential trade here. So let me give you a bit of the context before I dive in straight to the entry, exits, and also the potential setup. Alright, so this trend, so prior to that we have this relatively mild reaction. Let me just zoom out a little bit so we can get a bit more information. Alright, so this is the previous day US session, and subsequently we have this kind of the consolidation, and then by push up during the Asian session, and this is the relatively mild reaction. And during the US session, we have this kind of the reaction, and eventually we just trending within this descending wedge, which is bullish in nature. So that's the context. And we have a non-RTH low here. So this descending wedge, or the bullish wedge, basically just tested the non-RTH low and followed by a reversal. So let me walk you through the detail within the channel, or sorry, the wedge. So first of all, if you are a pattern trader, you will notice this descending channel. So it is bullish in nature, but let's just take a look at the price action. So first of all, this is the first down wave, and then another down wave, the down wave, the fourth. So you can see that the wave is getting a bit shorter. Let me delete this. And in terms of the thrust, so we can notice that this is the first thrust. So this is the progress to the downside, and this is the second thrust. So the progress to the downside is getting shorter and shorter. So from here to this distance, and then from this distance to just tiny bit here. So definitely this is shortening of the downward thrust. So this suggested that the downward momentum is fading. So definitely we're losing the momentum to the downside. So let me just analyze a bit more in terms of the volume. So I think we have a pretty interesting volume here. So let's just compare a few bars here. So we can see that the context is actually a losing momentum of the down momentum and also the downward thrust. But let's take a look at this hammer here. So this hammer comes with an increasing of the volume and followed by a rally, and this rally actually kind of stopped within this descending wedge, and subsequently we have another reaction down which forms a slightly lower low here. So this is another low here and also another hammer. So this two hammer is interesting. Let's just compare these two hammer. Let me zoom in a bit more so you can see the volume clearly. Alright, so these two hammer bars that we want to compare them. So as we can see that this first hammer comes with this green volume, and this hammer, the black hammer, comes with this red volume. And comparing the volume is slightly lower, but obviously we know that the demand here is present in both candles. So definitely there is demand present. So in this case, I would like to compare the demand within these two candles. So we can see that this is from the low to the open and close here. So this is a close, and this is the distance travel. So this is a low, this is a close, and eventually we have this much distance being traveled. And another candle, this is a hammer, this is the low, and this is the close, and we can notice that this is the distance travel. So in terms of the spread, definitely I think this is a bit larger than this bar here. And in terms of the distance travel from the low to the close, I would say that it's probably about the same. So definitely from here to there, yeah, it's about the same, but the spread is a bit larger and the spread is slightly smaller, but this comes with a bit lower volume. So at this point, I just suspected that definitely demand is in, and possibly the demand is better than the previous hammer candle here. So the rally that we anticipate like this will probably be better than the previous rally, which is this rally up here. So this is just the deduction from the 2 hammers bar, and eventually we just saw the price action and actually confirmed that, because this rally is actually breaking out from this descending wedge, and this is the best rally if we compare the rally within the down wedge, descending wedge. So this is definitely the biggest up wave or the biggest rally that we have ever seen down from this descending wedge, and followed by this horizontal type of the consolidation or reaction as a test. So definitely this is the confirmation. So we just have the greatest up wave and then followed by the best type of the reaction, unlike the one that we have seen, like this type of the reaction, this type of the reaction, this type, or even this type of the reaction. So this is the very shallow type, just consolidate horizontally. So we have the up wave together with the greatest shallow reaction that we have seen from this descending wedge. So definitely this gives us a confirmation to go ahead, and what I would like to do is definitely trade this kind of the breakout. And this bar here, the bullish bar here, actually plays as a confirmation bar row. As you can see that it actually closed above this immediate localized resistance, so you can just enter the long trade there. And eventually I think this could be a nice exit just to take some profit out, because it's the origin of the selling bar, which is the opening bar. So it's a natural place for people to take some profit and also to see some supply pick up. So if we scale out here, then I think the second or the last portion or the rest of the portion of the position will need to be exited somewhere around here, which we have seen this kind of the lower high and then followed by a breakdown here. So this acted as a upside non-confirmation, which is a failure to the upside. So definitely I think it's better to exit the trade there, kind of maybe a break even or slight profit here. So I think it's a bit slight profit, maybe 0.1 or 0.2 reward to risk ratio. But for the profit that we have taken at the top there, definitely is more than reward to risk ratio of 1, slightly more than 1.2 or 1.3. So anyway, this is the potential trade. Subsequently, I think if some of you will actually just stick to your original stop loss, then pretty much you can catch this nice and strong uptrend with a lot higher profits. But for me, I think I won't be able to stay and keep this trade until all the way to the end of the session. So this will be my to exit, to scale out, and also to protect or have an early exit. So anyway, this is the trade review, and for this is a potential trade review for the last Friday session. And let me just get back to the hourly time frame, and let's take a look at the current situation. So we talk about the possibility of S&P 500 to continue to trend up until around 3550, hitting the overbought overthrow channel. So this is the up channel here, and if we just continue to go up, so likely we'll hit somewhere around 3550 or even have some overbought and hitting above 3550. So definitely I think everything still looks very bullish. But for the trading plan for the later part of the session, definitely I think for the immediate supporting level, I'm still looking at around 3500 level. So this is consistent with the swing level. So we have this swing high, another swing high, which is corresponding to the around 3,500. So this could be the supporting area, immediate supporting area. So if you can just retrace a bit more and bounce up from there, I think that could become a nice long entry. So otherwise, the lower level will be around 3460 to 3470, and together with this mid line of the uptrend channel. So definitely still in a long trend, the uptrend, with a possibility of the bias to go up. So we're looking for the long entry. So 3,500 to maybe 3,410 will be the levels that I will be watching closely. And yeah, so I think these are the levels. Otherwise, for the immediate resistance, we found a swing high in a morning session. That could be around, let me see. So the swing high level is around 3524 or 25. So that could become a natural resistance. But so far I'm not interested in shorting the market top at the moment, unless it actually forms a nice structure in the 3 minutes time frame for me to lean on. So otherwise I will just stick to my plan to go long in the S&P 500. Alright, so this is the end of the video. Hope you'll find it useful and get something out from the video. So if you like the video, just click like and also hover to my name or picture to follow me. Do remember to subscribe to my channel so that you get instant notification of my future video ideas. So as usual, if you have any kind of the questions, comments or suggestions, or simply just would like to share some trade ideas with me or like me to have a look, feel free to comment it below. I will reply to you. And thanks for watching. I will talk to you soon. Bye bye.